today's part with the following interruption for a public service announcement.
All right, welcome to the Investing Intelligence Show, where we talk about artificial intelligence, company stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Reddit. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So Kai, I'm going to hit you with a few pieces of information that has arisen since our last recording, and we'll see what you think of them. First of all, I think Intel might have bottomed in the past few weeks. By the way, Intel happens to sell about a $5,000 CPU for every $200,000 of GPUs that are put together. So for every few GPUs, there is an Intel CPU. Can be AMD or ARM-based, but usually it's Intel. Next piece is that us and Neil Dutta were apparently the only ones who predicted that CPI and PPI would not be hot. The entire market was saying, oh, inflation's going to run hot, inflation's going to run hot. And guess what? I was saying episode after episode that the first few months of this year would actually be positive year-over-year comps for inflation, and we were right, everyone else is wrong. Lastly, this is my favorite. We got our idea for the acronyms from CNBC, and they have about 8 or 9 hosts on CNBC's Fast Money, over 200 years of combined investing experience. Not a single one of them could get as good of a return on their acronym as our worst person, which was me. So Carter Worth was their third best, had a 23% gain on his acronym for 2024. Steve Grasso was second best, had a 28% gain. And Mike Coe was the best, the winner, and he had a 34% gain on his acronym. I had a 164% gain on my acronym, and you had a 366% gain on your acronym. Now, for I do want to make a small change, a comment on my acronym for 2025. But before I go to that, any reaction to those 3 things?
Yeah, no changes. Number one. My second one is this is the Investing in AI podcast. Welcome to the James brag session here in regards to how great his picks were in 2024.
Well, now I have to bleep out my last name because you're always doxing me. So now I have to bleep out my last name. But go ahead.
My last comment is CNBC is trash. So those are my 3 comments for welcome to the Investing AI podcast. I was really disappointed. I listened to that. You're referencing the Fast Money. I actually had listened to that one as well. They were giving some trophy in regards to their picks, but I don't know what sort of constraints they put on their picks. I mean, they've got to make it sexy as well. I mean, I think my manacled was very sexy. I would also like to go ahead and throw in there while I'm thinking about it. I took a few positions. So we had talked before about dates and times to change. I have to come on and say when I'm bullish or bearish or change my position.
No, you don't, because it's a new year. Because we're starting over. We're starting over for 2025.
2024. So 2025. So I actually, there's a buy the rumor, sell the fact. And so I actually took some positions. This is not investing advice. It's just what I did in my particular opinion, in Tempus AI and TXN. TXN had a big drop, like 4 to 5%. Is on, I think it was this Friday or Thursday. And so I think Thursday, you could check that one out. My price target's still around $210 to $220 a share for TXN. And Tempus AI, I switched to being bullish on. But we're going to talk about a stock that I am currently bullish on as well, which I really liked your pick. Usually I don't like your picks for what we're going to talk about. I like my picks.
Before we get to that, let me just react to one thing you said. So you probably in this last political cycle heard a lot of podcasters and non-traditional media types say, hey, the world is finally realizing that maybe the people on the news aren't the best ones to guide us. And I think that the public has already made that realization, and they've listened more to podcasts than other types of news, social media. But unfortunately, I don't think that transition has been made for investing media, for financial media yet. But people need to look at this. I mean, seriously, we've got over 200 years of experience in these analysts on Fast Money, and we both beat them drastically outperform them. So look, they're just not good investors. Now, I will say they're good at news. Like, I absolutely must listen to Fast Money, and I like Closing Bell also, both parts of Closing Bell, because that's where I get my news. That's where I learn what's going on, what's happening. And I make a lot of decisions and catch a lot of leads based on that. But look, they're not necessarily, the people on Fast Money are hosts. They're television hosts. They're not true analysts. On Closing Bell, you get more of the true big money analysts who really know what they're doing, really know what's going on in the market, but not on fast money. Those are TV personalities. Anyways, but yeah, so you said I can't make any changes. I just want to make one note
No
for
changes.
okay. You know what? I'm stuck with it. I'm stuck with it, but I want to make one just observation because I used AI and I used ChatGPT to do some deep analysis on a certain type of investment that is called a covered call strategy, or you could call it a call writing strategy. So this might be something interesting for you to learn about, Kai, whether or not you've interacted with it yet or not. But there are these things, these ETFs called call writing strategies. And what they do is they sell a covered call for you on any of the big companies that you like. Like, let's say you like NVIDIA. Well, there's a covered call strategy for NVIDIA where they write covered calls on it for you and they pay you a premium over the course of the year. And so you can look at it at face value and say, hey, I'm making pretty good money. Like I had one that was for Amazon and it was actually in my acronym and I was making pretty good money. They're paying me out like more than once a month, I think. And you just see that money coming in. You're like, hey, I'm making good money. Well, I ran the data on these covered call ETFs and it just so happens they actually typically underperform the actual asset. So just to kind of flesh out what that means, if you look at the percent return of Amazon in 2024 and compare that to the overall return of the covered call strategy ETF with the payouts, Amazon itself would have made you more money. If you just take profits at the end of the year, it would have made you more money than all the little dividend type payments coming from that covered call strategy. So I had like two of those in my acronym. I'd love to yank them out, but you know what? I'm stuck with my acronym, so I will just live with it.
Yeah, can I say a little quick? So one other thing I wanted to bring up a few times. My goal for 2025 was bring up a few things that I'm doing during the week. And so I don't invest in covered call writing strategy ETFs, but however, when volatility is high, I've really one of the strategies I haven't even talked about with you is that I've been switching to both investing in the underlying in a long position and writing cover call strategies. So one of the things I've really done this last December and January is done that with NVIDIA. NVIDIA's in this sort of chop zone between 128 and went up to as high as $151 a share. And I've been both staying long on NVIDIA while taking advantage of this volatility. One of the things about Amazon in particularly is a position I've had a very large position in previously. Still have a position in full disclosure. However, the volatility or premium with Amazon trading has not been very good over the last 6 months to a year. So that may be one particular item on these ETFs is what I'm bringing up is just maybe you could look into that when the volatility is higher. For example, Palantir has great volatility. So NVIDIA, great volatility. So you're going to collect a lot more premium with those writing strategies. But that's something I've been toying with, when to do it, what particular strike price. I like to shoot for at least 30% APY, but you can get a lot higher yearly return on writing covered calls on certain underlying positions. So yeah, I just bring that up. That's something I've been doing this last month and have been doing pretty well with it. James, what is your thought on my particular strategy critique there?
I mean, so I actually don't like that strategy because I'm really a data-based investor. And the guy, Kirk, on Options Alpha, he actually back tested covered call strategies, massive data sets. And he found that essentially, when you're doing a lot of covered calls, you're going to miss big moves up in the underlying. Because as we know, when the stock goes up and you have a covered call written on it, you're going to lose the stock at the price at the strike price of that covered call. You're not going to make the additional upside. So his data found that it's actually a less profitable strategy than just holding the underlying. And that's what I care about. Like, what is the best strategy? It's bizarre how in areas like medicine, for example, there's such great data sets and you know what to do based on the data and the algorithms. And investing, it's like some kind of like witch doctor type of heebie-jeebie. Like no one's run the data on a lot of very basic things. No one is telling investors, what's a good and a bad thing to do. So that's why I love what Kirk did with all his back testing. Great podcast, Options Alpha. And then I just mentioned, you can use AI, you can use ChatGPT to try and flesh out what's really a good or a bad thing to do sometimes.
So in my particular strategy, just interesting. So leave us a comment in for our listeners out there if they do anything like this or what particular strategy they use in covered call writing strategies. But I also second what is it, Option Alpha or Kirk? Yeah, excellent podcast. Check that one out. He actually brings data-based research to some of your information. Now, I didn't like your analogy. However, one of the things I will say is that's not the whole position. It'd just be interesting to see what you think. We're having this conversation on air, but one of the things is I take a very large position in an underlying, and I don't write covered calls. Then I set aside a particular percentage of that those shares that I want to go ahead and write covered calls on. Sometimes I'll even trade, same thing, kind of more like what I'll sell a put and sell a call at the same time. But anyway, I don't know. What do you think about that? Taking a large position and then setting aside a particular percentage of your portfolio to trade some otherwise that you wouldn't use for covered calls. And the other last thing I would say is, what do you think about using it as a hedge, James? Hedging for a downturn.
I mean, I like to hedge with interest rates currently at 4.8. Well, they were at 4.8. Now they're at 4.6 on the 10-year. I would prefer to hedge with bonds, bond ETFs, maybe even long duration treasury ETFs. But as far as the question, your specific question was like take a larger position, maybe write covered calls on a portion of the position. The issue is that most retail investors don't have enough money to have hundreds of shares of a company. And that's why companies do stock splits. That's why companies do stock splits to bring down the share price lower so that people can write covered calls, for example. But yeah.
Yeah, for our listeners out there, you have to own 100 shares of a stock to basically write covered calls, sell, or own 100 shares when you sell a put. One of the things, so James has been using bond ETFs. One of the things another thing I want to put our listeners out there, you can actually do inverse ratio, or you can basically sell short. If you have a large position in NVIDIA, for example, you can sell short NVIDIA 2 times to protect some of your position. Or if you have a lot of, for example, the Magnificent Seven or NASDAQ heavy, you can sell short in particular downtrends and to hedge. Do you ever do that, James? Short the NASDAQ 2 times to hedge a position if you're heavy in NASDAQ?
So really, most people are using ETFs for that kind of a thing these days. So there's inverse ETFs for pretty much everything that you're mentioning. There's 2x, 3x inverse ETFs for the major indices. For single stocks, there's usually not 3x leverage ETFs, but they have 2x leverage ETFs.
I don't like anything more than 2x because you get in the numbers get a little fudgy when I was reading, particularly looking at the math. However, I actually made a little bit of I was up on some of my positions about a week or two ago when we were kind of in this downturn or a little bit of correction, hedging using a hedge on the NASDAQ and NVIDIA with a two buy leveraged, selling a short or going short. So, but yeah, I just was curious. I didn't go. I was just kind of experimenting with a few of those things, but it definitely worked as a hedge.
Yeah, cool. Well, jumping into our stock for today, Reddit. Reddit is really an existential question on AI. So if you think about the AI value chain, we know that it begins with a lithography machine made by, for example, ASML, or maybe Applied Materials is jumping in there to do some of that now. And we know that the value chain ends with you writing a prompt on ChatGPT. So in between that lithography machine made by ASML and your query on ChatGPT, there's a lot of companies and even sectors that are trying to capture value. So we're talking about the AI value chain. Where does data play in the AI value chain? And ultimately, your question as an AI investor is what sector and what companies will ultimately capture the most value in the AI value chain? Is it going to be data? Is it going to be lithography machines? Is it going to be GPU makers? Is it going to be ASIC makers? Is it going to be, there's so many options. Is it going to be the model companies? Who's going to really capture the most value long-term in AI? That's really the whole question that we're groping at, the whole question that we're coping with every single week or every single month on this show. So Reddit is the company that we're looking at today. Reddit is potentially an AI data play, and they've done pretty well based on speculation around their ability. I mean, listening to their last earnings call, there were so many questions about the AI angle. But let's just give some background here, and then we'll kind of get your take, Kai. So Reddit just had profitability for the first time. So they've been around since 2005. They just had their first profitable quarter, their first GAAP profitable quarter in this past quarter, which was their third quarter. Now they had 68% year over year revenue growth. So impressive revenue growth, 56% year over year growth in advertising. International revenue is growing 57% year over year. So they've got some really good growth numbers. And the question is, why? Why do they have these really, really good growth numbers? There are a few things that I think are leading to this kind of explosive year over year growth. One is that all of a sudden they're doing translation in 5 other languages. They're doing what they call machine translation, which is pretty much AI translation of most of their website to these other languages. Like French is one of the first big ones that they're doing. And supposedly that's helping them expand and, of course, sell more ads, get more clicks on ads, things like that. Now, we do know that they've had some agreements with some big AI companies, and they've gotten one-time payments. It's hard to say. They're not really saying, is it a one-time payment you got? Is it an ongoing payment? But then they also are working with some smaller companies, like a data partnership with Meltwater. It's kind of hard to flesh out exactly why they have this explosive year-over-year revenue growth. But the reason that's such an issue is because we want to know, are they going to continue to have such great growth? And I'm a little more skeptical of that, but let's just get your take on Reddit before I give kind of my final thoughts on it. What's your take on Reddit?
I'm curious. I have more questions than takes today. I really wanted to ask you. I mean, one thing in the news is TikTok is going dark tomorrow, right? So Reddit, obviously, one of the appealing things I like about Reddit is their drastic increase in revenue from advertising, right? And growth from advertising. And so do you think Reddit plays a role here with TikTok going dark if it basically is not in the United States going forward?
Yeah, first of all, I don't think TikTok is going to go dark. I think that even the Biden administration stepped in on Friday. They did a statement. They didn't do any kind of order. They just did a statement, said, "Hey, we're not going to be responsible for enforcing this law. That's going to fall to the Trump administration." So I don't think TikTok is going to go dark. If anything, I think Trump's main reason.
The Supreme Court upheld it. I mean, you think people are going to be able to access TikTok tomorrow? I want a prediction from James. I don't think so. I think TikTok is at least going to be a dark until maybe Elon buys TikTok, hopefully.
So there's a 100% chance that you have access to TikTok for the next week. Actually, I'd say indefinitely. There's a 100% chance that you're going to have access because Trump is going to come out. I think Trump just wants to look like the savior of something that 120 or 170 million. I think it's 170 million Americans who use TikTok. I think he just wants to look like a savior to those people. So if 170 million Americans use it, gosh, what's the percentage of Americans who don't like it or think it should go away? Well, obviously a much smaller number, maybe 10, 20, 30 million. It's hard to say.
So you don't think Reddit at all potentially is going to benefit at all or benefit from any of this? I mean, whether it goes dark, doesn't go dark, potentially the unknown here, does Reddit benefit at all?
Yeah, so let's step back and let's just look at these social media companies. So first of all, Reddit is a forum. Reddit is a question answer forum. That's really what it is. I think they're trying to compete a little bit more in other segments. Like, for example, they're trying to compete a little bit with Twitter. They're having businesses come on board and make business accounts, but they're not competing with short form video. Okay, the short form video platforms are Instagram Reels, YouTube Shorts, and TikTok. And obviously, we know that Twitter has tried to do short form video. X is trying to do short form video. How successful they are is hard to say. But look, let's look at valuations and compare that to what they're doing. So TikTok is expected to be worth between 50 and 100 billion. And by the way, before I even get into this, as we mentioned previously, a valuation is pretty simple. You can take the share price and multiply it by the amount of outstanding shares. Now, when the company is private, that's a little bit trickier to do, but we can generally get an idea. So TikTok is expected to be worth between 50 and 100 billion. Meta, which is, by the way, Facebook and Instagram, so 2 social media platforms in one there, is valued at 1.5 trillion. Okay, so maybe if you want to go half and half, maybe each of their profitable companies, profitable segments is 700 billion. Twitter, X, was purchased for $44 billion, and it's now valued somewhere between 9 and 19 billion. It's private, so it's a little tougher to say, but we can kind of see how the banks are marking up or marking down their shares. So we're going to say Twitter X is somewhere between 9 and 19 billion, between 10 and 20 billion. Reddit right now is valued at $30 billion. In other words, Twitter X valued at one third the value of Reddit. What's going on here? So I would say that in general, the short form video. Oh, I didn't mention YouTube. That's tough, but these short form video social media are clearly worth more than a forum, or in the case of Twitter, a short forum. What is Twitter? Twitter is like
Yeah.
a
So are you comparing Reddit at all to Snap or Amazon?
well, I don't touch Snap. I think Snap is the biggest piece of crap I've ever seen in my life before. I think they just need to go away completely. But I have heard that young people, like high school age, I don't, dude, Snap is so sketch. So apparently, young people are using Snap at higher rates than other social media. But I think they're going to graduate to Instagram and TikTok, or well, young people use TikTok and Snap apparently, like real young people. But look, so what was your question? Repeat your question again.
Oh, I'm just curious, comparison. We do have a few things we can compare these to. I mean, for example, are you comparing at all Pinterest? Are you comparing? The other one was Amazon. I was mentioning in regards to retail. The only reason why I'm mentioning these is regards to competition and advertising, not necessarily the online platform, but advertising, and particularly. So the advertisers are using that online platform, but and the online platform may be different, but where are advertisers' dollars going to go? And that's what we're really talking in regards to Reddit here, right? I mean, revenue growth due to advertising.
Absolutely. And you're kind of hitting the nail on the head here. So only 10% of Reddit's revenue is from data licensing. Data licensing is probably another way to consider their AI business. So only 10% of their overall revenue is coming from their AI business, if you want to call it that. And they're doing some cool stuff with investing in advertising optimization, advertising AI. Like we know that Meta had a big boost when they worked AI into their advertising, and now Reddit is starting to do that. So, yeah, look, they were asked on their conference call pretty directly about AI, and it was said this is the exact quote: it's a nice to have business, the data part is a nice to have business, but the future of Reddit is really our ads business. So they see themselves as an ad business. They even recently acquired Memorable AI, which is an ad optimization company that I mentioned. So, yeah, I mean, look, but here's my concern. Look at Twitter. I mean, this company went from 44 billion to 9 billion. Why is Reddit worth 3 times as much as X? That's my concern here. It's not short form video, which is hot right now. It's pretty much a forum that people go to find out info on products, maybe Wall Street bets. It's like a discussion forum, is really what Reddit is. Now, Reddit is the sixth most searched term on Google. So a lot of people are looking for quality data on Reddit, quality information on Reddit to know what to buy, to know if something works. They go to Reddit or they search Google to get to Reddit. But the question is like, do they have a long-term arc of monetization? Now, I have a pretty simple fundamental view towards investing. As you know, Kai, the two things I look at are revenue growth year over year and margins. They have excellent revenue growth year over year, 68%, and their margins are around 30%, which is decent, not bad. So considering they are now profitable, I'm going to go ahead and buy some Reddit. So I'll give you my short take, and then we'll get yours.
Interesting. Okay. All
I
right.
I am bullish on Reddit because they have 68% year over year revenue growth and a decent 30% margins. 10% of their business comes from AI, but I think they have a lot of room to run in that regard.
Yeah, I'm bullish on Revit because of advertising revenue growth, and they're in a power trend. I mean, very simply. However, so there's my take. So, but you will have to explain to me, and I'm not going to take. I already have a small position, full disclosure, in Reddit, but I'm not taking a large position because you're going to have to explain to me why I wouldn't want to put my money in basically the $1.5 trillion company that's trading at a forward PE in the mid 20s. So you have a current PE that's very low and a forward PE that's like 22. So you have to really, really, really explain to me why me as an investor, I mean, that is my biggest critique, would not take my money and put it on a company like Meta and go long in Meta versus Reddit, because the PE of Reddit, I mean, well, one, it's not there, but I think it's like forward PE is like 200 or something like that. I mean, it's not, because they just became profitable. They just started having, they just became profitable. So, yeah, I think there's some concern there, but I really like the technicals. I like the advertising revenue growth. I think it's a very unique platform. Just curious, do you use Reddit at all?
I think everyone winds up on Reddit. If you're looking for info on pretty much anything, you wind up on Reddit. The comparison to Meta is a tough one. And I'm just going to bring up one thing that I've mentioned multiple times in the past. So it's easier to get explosive growth in a smaller company, a smaller market cap company, than it is in a larger one. And when you get that explosive growth, that really can lead to explosive growth in the share price. So Meta, we know, is already 1.5 trillion. So it's harder. I mean, Meta could double, but it's harder to really get it's harder to get like a triple or a quadruple out of Meta than it would be out of Reddit. I mean, just let's say Reddit grew to Meta. Real quick. Let's just say Meta, let's see Reddit grew to Meta someday. How many tripling and quadrupling of the stock price would that mean? If the market cap grew from 30 billion to 1.5 trillion, I mean, what is that, 20x, 30x increase in share? I'm not great at math off the top of my head, but you drastically increase the money that you've got there. Now with Meta, you might double your money.
Yeah, fair. You're a very good critique. I'm only bringing it up in regards to risk. And I do think that I'm throwing that out there for our listeners. I think Meta is an investment opportunity currently. I mean, I'm bullish on Meta. I mean, let's go 2025. I'm bullish on Meta because I do think we're going to see advertising revenue increase, especially in this, I think, economic uptrend that we are in currently. Man, the 21 day, I mean, Reddit is in a power trend. And I also would want to, let's see what you think about this statement. I'm bringing this up as a provocative comment to you, James. But Reddit's, I know where you're coming up with the calculation. It's not worth that. I wouldn't pay that. I mean, granted, like I'm not a trillionaire, right? I'm not Elon Musk, but I wouldn't pay that. Twitter's worth more. It's not publicly traded. So X is worth more than what it's currently valued at, in my opinion. So I don't think Elon lost out on any money buying Twitter. I'm glad Elon did, but it's just because it's a publicly traded company is where it's easier to come up with that calculation. So,
All right, awesome. So I'd like to get your 10-second take on Reddit. I've already given mine, and then we're going to get ChatGPT o1, their most advanced model, to give its take. Can you just tell me? Yeah, I mean, you said it's not worth what it's trading at right now is what you said, but I'm bullish or I'm bearish.
Yeah, that's exactly what I said. I said I'm bullish on Reddit because it's in a power trend and because of advertising revenue growth. I'm only bringing that up as a provocative statement to you. I mean, in reality, same thing for me. I'm taking my larger position in Meta. If I'm trying to choose between Meta and Reddit, I'm bullish on both, but I'm taking my larger position on.
Okay. Yeah, it's possible I was talking to ChatGPT setting this up and I missed what you said, but let's hear from ChatGPT.
I'm bullish on Reddit in 2025 because user-driven content powers AI insights, the platform's data is lucrative, and advertising revenue continues to scale.
Yeah, I mean, sounds like a little bit both. ChatGPT hasn't outthought us on this one, James. I mean, we're all bullish because of the potential revenue growth from advertising. Also, Reddit is unique. I've spent more time on Reddit this last 6 months than I ever have. I'll say off air why. I mean, one of these is a unique little hobby we've had, and I've been kind of intrigued by reading some of these Reddit or following some of these Reddit groups, as well as, trading and things like that. Just hearing some people. I mean, I love seeing these Reddit posts where somebody's like all in 100,000. I mean, I don't know if it's absolutely true. Have you seen those? It's kind of funny. And then they'll be like they'll show their accounts and it'll be like 100,000 and then it'll be like 0. And they're like, I'm living in my mother's basement, So, but I get a kick out of Reddit, even more than TikTok. I think TikTok's going dark tomorrow. We'll see. James says no. I say yes. We're both bullish on Reddit for once, and I didn't get to provoke James as much. We also learned that James is just, is everything is great, James, in regards to his mnemonic. I didn't really do research. I thought about that driving home, and did somebody pick, what the second word was in your or did I just manacle you? I'm going to manacle you the whole year.
It was so easy. All you had to do was just take the first letter of everything I said. Someone posted and they were wrong. So the competition's over. No one won. So the mnemonic, or the acronym rather, was James Soaring, Soaring. No one got it. It wasn't that hard to figure out and get win 50 free dollars of crypto. But nonetheless, I'm looking forward to seeing how our acronyms do. And, I think that we had these past couple months since the election, we had this kind of sell down. We had this stagnation. I think the stagnation might be over, especially if my prediction of 3 months, first month was right. My prediction of 3 months of good inflation numbers comes true. I think we've got a pretty decent first start to the year. So I'm optimistic on everything coming up here. Yeah.
Yeah, I mean, it was a rough month of December, January. I mean, I shouldn't say that. It was kind of some volatility in the end of December. We had a really good first few days of January, and then it's been choppy since then. However, I mean, man, because of and this is where I'm saying you can take advantage of some of this volatility. It's been my most profitable month, even with the downturn. Let me say that, with some of these different strategies, which has been nice. And so I'm looking really forward to these next couple of weeks and this next month ahead. I'm pretty bullish on next week.
Yeah, there are a couple instances where I should have shorted the VIX. We've had two huge moves up in the VIX over the past couple months, and both times I should have known to buy put spreads on the VIX, and I didn't do it. But part of it is just like, how active are you? There are little opportunities to make money. Like, I jumped in when Bitcoin was at 92,000 a week ago or whatever, or actually it was just a few days ago. I think 5 days ago, I jumped into one of my crypto trading platforms, and I did what we call perpetual futures, which is just like, you're just buying an amount of leverage for it to go up on perps, perpetual futures. So I bought that on Bitcoin expecting a move up. And when it went from like 92 to 95, I closed the position, and now it's at like 105. So it's like, closing out too early is one of my biggest mistakes in 2024. And I'm already repeating that. So, but go ahead. What were you going to say?
Well, one of the things I was going to say, because you follow crypto more closely than I do, can you treat some of these, MicroStrategy, Bitcoin, Ethereum, watch those and trade them like you do the VIX? I mean, they're a risk on investment. So when you see Bitcoin rising, is that risk on, and you say, I want to take a larger position in for example, the NASDAQ, or is there a correlation there?
Oh, massive correlation. And actually, crypto people don't like to admit it, but we have the data, people. Like, you can see that they're highly correlated assets. So Bitcoin and Ethereum and other cryptos are highly correlated to the tech sector or tech stocks, just meaning that they have a higher beta. They're more correlated to risk on, risk off.
Yeah. So you actually may be impressed by this, James. I saw Bitcoin when it went down to 92. What is it, 92, 90? What did it go down to? When it had its biggest jump, I think its biggest jump was maybe like Wednesday. When it had its biggest jump on Wednesday, I went heavy in the NASDAQ. I'm just going to see and I went back, into Bitcoin, and we'll see. I mean, now basically, I think we've gone sort of risk on, but we'll see what happens next week. Monday's a holiday, inauguration, Martin Luther King Day, and short trading week. So,
yeah, I've been trying to teach you how to trade perpetual futures in crypto for about a year now, and you haven't really shown any initiative. But eventually, I will teach you how to trade perpetual futures, and then you can take more leverage if you want to. I know you're more of like a 2-3x leverage type of guy, but you can do 20x leverage, or you can do 500x leverage if you like to. So you can turn $1 into $500 if you'd like to. Anyways, so I'll let you go. But excellent episode.
Yeah, leave us a like, comment, please. Also, tell us what you think of CNBC. I'm anxious to hear about that as well, and we'll look forward to talking to you next time.
Awesome. Thanks for tuning into our show. Please give us a like or comment. We'll be back in the next episode to cover more AI stocks. You can find all our holdings and trades at investingintel.ai.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. Revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.